Stan the Annuity Man joining you to answer the question. By the way, I'm America's annuity agent, if you didn't know, licensed in all 50 states. I'm the guy out here, I'm the educator, and I also sell annuities, just to let you know. If you want to check us out, stantheannuityman.com. But what you're here for is to talk about the annuity application process, which is pretty interesting conversation. We're going to go into the details of how that all works, how it works with us, how it pretty much works across the industry. And then from there, you'll have a good understanding of what it takes and to get a policy delivered to you and the information that you have to give up confidentially to get approved. All right, let's talk about the annuity application process. Digressing just a tad, I did a podcast, it was about 20 minutes long, on this whole subject. This video is not going to be that long, but the Annuity Man podcast, if you get those type of things, or you can go to my site and listen to it there, it goes into detail. I mean, I went through every page just to kind of tell you what it's going to be. But let's go over the information that you're going to provide to the annuity company. Understand that everything is confidential, and the questions that my staff would be asking you, or any other agent would be asking you, is confidential, and it's not questions that I came up with. It's questions that the annuity companies have to know in order to approve the application. Now, there are some specific guidelines out there for annuities to make sure that people aren't putting too much money into annuities. About 10 years ago, there were a round of lawsuits based upon people suing. Even though they made the decision to put all their money in, they sued because they were allowed to put all their money in. So now there's some specific guidelines that won't allow you to, and I think it's great, you can't put too much money into an annuity, which protects the consumer, which is a good thing. I'll give you an example. Here's a story. Recently, I had a lady call me. She had $150,000 to her name. And she said, I want to put $150,000 into a single premium immediate annuity because I need that lifetime income stream. You know, she was on a fixed, Social Security, and she needed more income. And on surface, you're probably thinking, now, Stan, that makes total sense. Why wouldn't you do that? It's a transfer of risk. It's a fixed annuity. There's no annual fees. It's based on her life expectancy, the payment. It's a good deal for her. You would be right. It is a good deal for her. But here's the reality. The annuity companies will not allow her to put all of her money into an annuity, and I think that's a good thing, even though in this specific case, it would have made total sense for her to go all in with an immediate annuity. In most cases, carriers don't like to see anybody put in more than 50% of their investable net worth into annuities. Now you're saying, well, I know this guy that bought, he took it all. Well, somebody filled out the application wrong, okay? The only way that that goes through is if the application is filled out incorrectly to show that that amount isn't 100% of that person's portfolio. Because the annuity companies, when they get the application from you, they're going to look at those ratios, and if the ratios aren't right, if it's too much money in annuity and you don't have enough liquid money, they're not going to approve it. That's a good thing. I know the annuity industry gets a bad rap because there are some bad actors out there, just like any industry, okay? But they are very conscious of the fact that there's 10,000 baby boomers retiring every single day. That won't guarantees, but they want to make sure that the right proportion and allocation is in place so that they have, liquid money around in case there's an emergency, etc. And that's the reason that this lady couldn't put all $150,000 of her money in an immediate annuity, because that's an illiquid product that creates a guaranteed lifetime income stream, and there's no wiggle room, there's no liquidity, and they would not approve it. So, hey, not all the time when you have an idea about annuity will the annuity company even take all of the money that you want to put in, but understand that's a good thing. Okay, so I got the trusty whiteboard pen, and we're going to kind of go through some things that you're going to be asked by the carrier. Here's the way it works. Hey, Stan, we want to buy this annuity. We got the quotes from you at stantheannuityman.com. My staff's going to call you. We're going to go through the questions, okay? Not our questions, carrier's questions. Obviously, they're going to want to know name, typical stuff, right? Name, address, all that stuff. That says address, by the way. You have to list beneficiaries, all the normal stuff. If you've ever opened an account at a brokerage firm or at a bank, same thing. Okay, not as bad as a mortgage, but But here's where people start reflexing a little bit and saying, I don't want to give that information. Financial information. They're going to want to know net worth. They're going to want to know income. They meaning the annuity company. They're going to want to know your investment history. And you got to shoot straight. Because if you don't shoot straight, we don't take the application. We don't fill in the blanks. You have to answer every single question that's asked of you. Understand it's confidential. Don't be some conspiracy theory nut. But the reason that they're asking that is they're not compiling some database of your information. They're not. They're making sure that you are suitable and the annuity that's being recommended is appropriate for your specific situation, and primarily that you're not putting too much money into the annuity. Now I know you're saying, wait a minute, aren't all the annuity agents just a bunch of sales dudes out there just selling? No, maybe some of them. I mean, like I said, all annuities have bad actors, but at the end of the day, you're going to have to give up all this information confidentially in order for it to, be approved, etc. Now, the application process, the timing of it, there's no perfect answer there. Typically, it's a 7 to 14 day application process from start to finish if you're writing a check to the carrier. If it's a transfer of an annuity or a transfer from another account, like an IRA account or another account, you can add another week to that, but there's no guarantee it's going to get done in those 2 to 3 week time period. It depends on the carrier, it depends on where the money's coming from. There's a lot of determining factors, but it's not an overnight thing, even though that carriers are getting more and more electronically driven. A lot of the apps now are e-apps online, encrypted obviously, but a lot of them still use paper apps and need wet ink signatures. So it just depends on the carrier, depends on the product, depends on what you're buying. Certainly we can walk you through that, but understand the application process is very, very similar to opening a bank account, buying a CD at a bank, or going to a brokerage firm and opening an account at a brokerage firm. They're going to want confidential information to make sure that it's suitable for you. That was kind of watching paint dry, right? Thanks for hanging in there with me, but you need to know how it all works. Fun video I just did called "Are Annuities a Ripoff?" How about that? How about that title? Because we get that a lot, and a lot of people think they are mistakenly. With that, please subscribe to right underneath. Please subscribe, hit that button. I do these videos every day, Monday through Friday, brand new ones that you can take a look at, because I am America's annuity agent, Stan the Annuity Man. And make sure to visit us at stantheannuityman.com. See you next time.